22 miles off the coast of England, there's a British island where the income tax rate is 0. Not low, not clever, 0. No income tax, no capital gains tax, no inheritance tax, no VAT. It's called Sark. It's flown under the British Crown for 900 years. You don't need a visa to live there, and right now there are people on that island handing the taxman nothing on what they earn. And here's the part that'll annoy you. While you'd hand over 40% of your estate the day you die, there are islands, British islands, Union Jack flying, where that tax simply does not exist. 3 of them, all within sight of Britain, all open to anyone holding a UK passport. I'm going to show you all 3, Sark, the Channel Islands and the Isle of Man, what you'd actually pay, what it really costs to live there, and which one you could realistically move to, ranked by how easy it is to pull off. And stay till the end, because the last one has a rule that lets a billionaire pay the exact same tax as a surgeon on a salary. A £200,000 ceiling on tax. Once you understand it, you'll see exactly why the rich have been quietly slipping away there for years. So let's start with the extreme one, Sark. Picture an island 3 miles long. No cars, they're banned. No airport, no street lights. You get about on a bike, on foot, or behind a tractor. Around 600 people live there, and until 2008 it was run as the last feudal state in Europe. And on Sark, you pay nothing on your income. There's no income tax. No capital gains tax. No inheritance tax. No VAT. Now, before you sell the house, there's a catch. Sark pays its way with a small property tax based on the size of your land and home. For most people, that's a few £100s a year. That's the bill, that's it. But the problem was never the tax. It's the living, no change shops. The broadband turned up late, and if you need a proper hospital, you're getting on a boat to Guernsey. Sark is living proof the zero-tax British island exists. It's just not for everyone. So let's move to something you could actually live on. Guernsey, 30 miles off the French coast, properly British, and a genuine option. Here's the deal. Income tax is a flat 20%. That's the lot, no 45% top rate like on the mainland, no sliding scale that punishes you the more you earn. 20%, whether you're on 30,000 or 300,000. And the taxes that hurt the most back home, gone. No capital gains tax, sell a business, sell your shares, and you keep the lot. No inheritance tax, when you die, your family inherits everything. No VAT, so the weekly shop isn't quietly taxed on top. But here's the bit that matters if you've done well for yourself. Guernsey puts a ceiling on your tax. A cap, around £160,000 a year, and above that, however rich you are, you simply stop paying more. There's a string attached, naturally, housing. Guernsey splits its homes into 2 markets, local and open, and to move there freely, you're buying on the open market, where the prices start high and climb fast. The island lets you in. It just makes sure you can afford the door. Now turn it up a notch. Jersey, the biggest of the Channel Islands, and the one that openly courts the rich. Same headline perks. 20% income tax, no capital gains tax, no inheritance tax. But Jersey has built an actual scheme for the wealthy, and it's brazen. It's called high-value residency. Qualify for it, and here's your deal. You pay 20% on the first £1.25 million you earn, and just 1% on everything above that. 1%. The price of the ticket. You commit to a minimum tax bill of around £250,000 a year, every single year, and you buy a home worth at least £1.75 million. Read that back. Jersey is openly saying, prove you're rich enough and we'll tax your fortune at 1%. It's not a loophole whispered between accountants. It's official policy, printed on the government's own website. And every year, a fresh queue of millionaires takes them up on it. And now the one that should make you sit up, because this part isn't about being a millionaire. It's about what happens when you die. In Britain, inheritance tax is 40%. You build a life. You pay tax on every pound as you earn it. You buy a house, you save. And then when you go, the taxman takes 40 pence of every pound above the threshold. An ordinary family home and a modest nest egg can hand the treasury hundreds of thousands. On these islands, nothing. Sark, Guernsey, Jersey, the Isle of Man, not one of them charges a single penny of inheritance tax. So picture two identical families, same house, same savings, say £1,000,000 all in. The mainland family loses around 400,000 of it to inheritance tax. The island family loses nothing, same flag, same king. A £400,000 gap decided by nothing more than which side of the water you happen to live on. That's not a rumor, that's the law, and it's the real reason these islands matter. And it isn't only the super-rich this works for. Think about a pension. Draw your private pension on the mainland, and it's taxed as income. The taxman takes his slice, every year, for the rest of your life. On these islands, that same pension is taxed at 20% at the very most, and often a good deal less once your allowance is counted. No capital gains tax nibbling at your investments. No inheritance tax on whatever's left for the kids. For a retired couple sitting on a paid-off house and a decent pension pot, the difference over 20 years isn't a nice holiday. It's tens of thousands of pounds, money that stays in your account instead of the treasuries. That's why it isn't only hedge fund managers making the move. It's ordinary people who sat down and did the sums. So how is any of this legal? Quick bit of history, because it explains the whole thing. These aren't UK counties. They're Crown dependencies. The Channel Islands were part of the Duchy of Normandy 1,000 years ago, and when the Normans took England in 1066, the islands came with the Crown, but as the monarch's personal possessions, never as part of England. So today they're loyal to the king, defended by Britain, carrying British passports, but they set their own taxes, and Westminster doesn't get a vote. That ancient quirk is the entire reason a British island can charge you nothing while the mainland charges you everything. Before I show you number one, the easiest island to actually move to, and the £200,000 rule the wealthy lean on, do me one favor. If this is opening your eyes, hit subscribe. It genuinely helps, and there's plenty more like this on the way. Right, back to it. Which brings us to number one, the big one, the Isle of Man. It sits out in the Irish Sea, between England and Ireland, a self-governing British island with its own parliament over 1,000 years old, the oldest in the world. And it is, by a distance, the easiest of all of these to actually move to. Here's why. The Channel Islands fence off their housing. The Isle of Man doesn't. If you hold a British passport, you could move to the Isle of Man tomorrow. No visa, no permit, no housing restriction, no minimum fortune required. You just go. And the taxes, no inheritance tax, no capital gains tax, no stamp duty on your home. Income tax tops out at 20%, with a slice of it tax-free below that. But here's the rule I promised you, the one that lets a billionaire pay the same as everyone else. The Isle of Man caps your income tax at £200,000 a year. Per person. Earn 1 million, earn 10 million, earn 100 million, your income tax bill stops dead at 200 grand. A surgeon on a very good salary might pay close to that. A billionaire pays the identical figure, the same ceiling for both. That is the rule the very wealthy have used quietly for years, and now you know it too. Now, before you start packing, the honest part, none of this is a free lunch. You have to actually live there. These islands tax residents, not tourists. You can't keep the London flat, fly in for the odd weekend, and claim the zero rate. You move. You commit. You make it your real home, and most have a rule about how many days a year you spend on the island. The cost of living isn't nothing either. Almost everything arrives by boat or plane, so the weekly shop runs dearer than the mainland, and property, especially on Guernsey and Jersey, is steep. The Isle of Man still charges VAT, shared with the UK, so the shops there aren't tax-free. And it's remote. Brilliant if you want quiet, clean air, and a crime rate near zero. Harder if you need a big teaching hospital, a major airport, or the grandchildren round the corner. The tax saving is real. So is the trade. These islands hand you your money back, but they ask for your postcode in return. So step back for a second, because there's a bigger picture here. None of this is hidden. None of it is illegal. There's no offshore trickery, no shell company, no clever accountant required. These are British islands, flying the British flag, and their tax rules are printed in plain English on government websites anyone can read. The wealthy have always known. It's why you'll find more registered millionaires packed onto Jersey and the Isle of Man than almost anywhere else in the British Isles. They didn't find a loophole, they just read the map. And the only reason most people never even consider it isn't money. Plenty of ordinary pensioners and remote workers have made the move. It's that nobody ever told them these places were an option at all. The stretch of water in between does the quiet work the tax office never could. Out of sight, out of mind. So let's go back to where we started. Sark, 22 miles off England, income tax of zero. Guernsey and Jersey, where your family keeps every penny when you're gone. And the Isle of Man, where the tax bill stops dead at £200,000 however rich you get. And where, with a British passport, you could be living by this time next year. 4 British islands, 1 king. And a wall of tax that simply vanishes the moment you cross the water. So would you actually do it? Trade the mainland for a rock in the sea to keep what you've earned? Tell me in the comments. I read everyone. If this was worth your time, give it a like and subscribe for more of the British stories nobody else will tell you straight. Cheers.